Let's talk about appraisal reviews and second appraisals. So getting a home appraisal, I don't know, it's done by most loans, right? Some loans you don't need appraisals. So obviously we're not talking about those loans, but I would say the vast majority of mortgages do require appraisals. An appraiser is somebody that goes out to the property or at least does some homework. Sometimes they don't go out, sometimes they just do homework. But the appraiser is going to give some market valuation, some number that says the house is worth X. And that appraisal is based on data of homes that have sold in recent past that are similar to that home. They use comps, comparables. They will use perhaps one, maybe two listings to kind of show like what might be trending, but for the most part, it's going to be on homes that have sold recently nearby, similar size, shape, all that stuff. So that's what an appraisal is. And so an appraisal review says that as appraisals come in, they're given a score. So it depends on the product and the program of what you're doing. But let's say conventional financing with Fannie Mae and Freddie Mac. When an appraisal gets done, that is uploaded to their system, and their system, whatever they do with their fancy systems, gives it a grade or a score. If those scores come out such that it becomes like kind of an outside the normal, it's going to require potentially just closer scrutiny to see if more information is needed. So an appraisal review can be done where they say, "Hey, I do want something to look at this or a second set of eyes." So whether it's another underwriter or whether it's just escalated internally, maybe they go back to the appraiser to say, "Hey, give me more information on this. Something's just not feeling right on this." And so other programs, a lot of times they rely on the underwriter to be the eyes and ears. And so the underwriter's discretion is to say, "Hey, I need more explanation on this or that or the other." So it's this piece, right? So that's the appraisal review process. Now, there are instances where maybe somebody doesn't like the value. The value comes in lower, whether it's a purchase or a refinance. Maybe somebody says, "Man, this value is not accurate." Now, again, just because it comes in low doesn't mean it's bad. It just means that if it comes in lower than expected, we just have to make sure it's accurate. So I always tell folks, I don't care what it comes in at. I just want to make sure it's an accurate appraisal. If it hits the value and it's accurate, that's good. If it hits the value, but it's not an accurate appraisal and it's an inflated value, that's bad. I mean, the loan can still maybe move forward or at least higher scrutiny, but the reality is we look for accuracy. And so second appraisals can be required by underwriter, it depends on the program, where they say, "Hey, I just need to check this dude." Now, what they're doing is on the second appraisal, they're not doing it if it's an internal order. They're not doing it because, hey, the value's low. Like it is rare, like super rare, very, very rare to or be able to order willy-nilly just another appraisal because we didn't like the first one because the value came in low. That's not the point. Second appraisals are often ordered for like jumbo loans, if they're really big loans, like a home that's $1.5 million loan amount or $2 million loan amount, and it's just a bigger home. There's not as many homes sold in that area, or maybe the lender just wants to really make sure they have the right value. They might internally order a second appraisal. There may be like with FHA, if it's a quick flip, like somebody bought it and selling it, and now it's an FHA buyer 90 days later buying it. FHA may require a second appraisal just to verify that their value is the value. But again, this is not at the request at the borrower because they're grumpy about the low value. So to be very clear, there are instances where second appraisals are required or can be ordered, but it's not to go get a higher value. Okay. In fact, when you order those second appraisals, they're not going to give you the higher value if it comes back. They're going to give you the lower of the two most times. So again, that second appraisal is not there to help you. It's just to validate and can potentially even hurt you. So that's when a second appraisal will be needed. If an appraisal comes in low and a buyer doesn't like it, I hate to say it, but at some point it may just be you got to go to a new lender, get a new appraisal. That's not always a solution, by the way. If you're doing a VA or FHA loan, that appraisal is going to stay with the house. So if you go get that type of loan, so just know that you can't just run away from your problems. But those are the examples of when you might need an appraisal review. If it's outside the norm, or if it doesn't feel right, or if it's got a different, SSR score or something like that, where it's just doesn't work. And so again, the mortgage lender will hopefully communicate, or the mortgage mark team will communicate what's going on behind the scenes and what we need to do and why we need to do it. But it can be complicated, but just know if you're grumpy because the value came in low, it is extremely rare that you can go get another one to see it. Now, I've done it. We've done it over my career, but it is rare because the reason why we did it, we had enough data to prove that the appraiser was basically incompetent. I don't mean that the way it sounds. And it could be that they're just not familiar with the area. There's data that they're not refusing to, not consider, things like that. So it can be done, but it is extremely, extremely rare. So just keep that in mind. But if you have questions or need something from us, even if we're not doing the loan, if you just want to, ask us a few questions, the Mortgage Mark team is always here to help. And when you think mortgage, think Mark.